This is why you have a problem trading the market structure. You don't know how to identify your weak highs and your weak lows, your strong high and your strong lows. In this video, I'm going to show you how to identify them, how to trade them as a strategy, or add them as a confluence to make your trading strategy even stronger. All right? Good day, everyone. Welcome back to the channel. There is a quiz at the end of this video to test your understanding of the concept that we discussed. Ensure to leave your answer in the comment section and I will check them out. All right. So without further ado, let's dive into the video. This is how an ideal market structure looks like, right? This is how it looks like. But oftentimes, you don't get a perfect structure like this on the chart, right? And this is where a lot of persons have problem when they are, when they go to the chart and instead of having a perfect structure like this, they are faced with structures like this, right? Situations like this. They get confused. They get confused identifying their higher highs and higher lows, or the strong highs and the strong lows, right? So if you're in that situation, you don't have a problem. At the end of this video, you're going to understand how to identify all of those things, right? And you're not going to have a problem with these structures anymore, right? So when we have a situation like this, we mark this zone as the break of structure, the BOS, right? We say this is the BOS. Here also is the BOS, right? And this zone here is the higher low. This is the higher low as well, right? Now, in this type of scenario, this is a perfect market structure, right? Where we have BOS to the upside in a definite direction. So this is a bullish market. Now, in this second scenario, this is also a bullish market, right? But the situation we have here is we have lots of structures, more structures than this first scenario, right? So if you're asked to mark this type of structure, here is going to be your BOS, your first BOS. Here is your second BOS, right? Now, why is this the second BOS and not this point? Why not this point, right? Or why not? Some persons are going to even say this is a change of character, right? Some persons are going to say this zone is struck. They are going to say this is a change of character, but this is actually not a change of character. Now, I'm going to explain why. This is not a change of character. Let me label it. Some persons are going to say, okay, this is a change of character. Why? Because price has taken out a low, this low, right? Now, whenever a low fails in a bullish scenario now, in this bullish scenario, whenever a low fails to create a new high, we refer to that low as a weak low. So this zone here, this point was expected to take out this high, but it failed, right? It failed to take out this high. So the market had to take it out because it failed in its obligation to take out the new high. Market took it out before continuing the trend. So when this type of situation happened in the market, it is not a change of character. It is simply the market taking out a weak low, right? It's more like you go for a military training, right? The weaklings are going to be, sent home, right? That's how it is here as well. Also, let's consider a bearish scenario as well. Let's say you have higher lows, lower highs and lower lows. This is an ideal market, right? Let's say we also have a situation this way where price does things like this, right? This is not a change of character. This is not a change of character. Now, why is it not a change of character? It is not a change of character because this is the lower high that created the last low, that created this low. Until this lower high is taken, before we can see price has changed character, until price goes up to take this low, to take this high, before we refer to this zone, to this zone as a change of character. But until then, price is still trending downwards, right? Until then, it is still a downtrend. And this low here, this lower high was taken out by price because it failed to create a new low. It is expected of this higher low, of this lower high, to take out this low. right? But it failed. So price had to take it out because it's a weak low. We refer to such, sorry, a weak high. We refer to such highs as weak highs. So this is a weak high because it failed to create a new low. And likewise, any low that creates a high, any lower high that creates any higher low that creates a high, for example, this type of lower high and this one and this one, this one, and this one, we refer to them as strong lows. This is a strong low. This is a strong low. Why? Because it fulfilled its obligation, right? It created a new higher high. So we say these are strong lows. Now, so we don't expect price to take out these lows anymore. We don't expect price to come and take them out, right? We just expect price to retrace and then, expand from any element of price within this zone. But we don't expect price to take them out, right? Likewise, in a bearish scenario, any lower high that creates a new low is referred to as a strong high. So this is a strong high. This one here is a strong high, right? And this one also is a strong high. Why? Because it created a new low, right? Now, so let's quickly look at chart examples so we can understand this concept even better. Now, let's look at these charts. Let me look for a clear example for us. Okay, now just look at this. This is a trendy market, right? This is price creating this is a break of structure, right? This is a BOS. Sorry about that. Sorry about that. Let me quickly take it out. This is a BOS, right? This is a break of structure. Now, what do we expect? We expect price to, retrace and then move to create another BOS, right? To create another BOS. This was our expectation, right? But price failed in that obligation. Price failed to give us a BOS. Instead, look at what price did. Price retraced, but it failed to go up. Instead, it failed to give us a new higher high, right? So look at what price did in return. Price took it out since it's a weak low. It's a weak higher low. So price has to take it out. Now, so if you are a trader or if you are, sorry about that, if you want to increase the win rate of your strategy, right, you can be looking for where there are weak highs in a trend, right, or where there are weak lows in the trend, and you add that as a confluence to your strategy, right? So look at this example. Now, whenever you spot a weak low or a weak high, you simply go to mark out the order block, right? The order block that created the last high. The other block that was responsible for the last high. Let me cut price so we see what I'm talking about, right? Let me cut price. Let me cut price and multiply so we can see. So this was our last break of structure, right? This was our last BOS. Now, so what do we expect? We expect price to give us another BOS here, right? Another BOS. So let's play price and see what price did. Okay, just look at it. Now, price failed to create a new high, right? Instead, it started coming down. So in this scenario, since we know we are bullish, since it's the bullish market, what we are going to do, we are going to mark out this low here, right? We mark out this low for execution because we know that price is definitely going to take it out, right? And then we mark our zone, we mark our order block here, right? That created the last break of structure. Then we put our long position, our long two, and then we target this high, right? We target this high. We expect price to give us another high. Remember, before you do this, you have to confirm from the higher time frame that the market is actually trending up, right? This is an uptrend. So we expect, or we know that this particular pair is in an uptrend on the higher time frame, right? Ensure you're following the trend. So let's replay price and see how we got tagged in. Okay, boom, we've been tagged in. Just look at it. Just look at it. Look how beautiful it's moving now. And that is it, right? That is it. We expect price to hit our take profit, give us a new high, right? And boom, boom, take profit hits, right? And that is a very, very good take profit. So you see how you can actually trade weak highs and weak lows to make profits in the market, right? Now let's look for a bearish scenario. Let's look for a bearish scenario. Let's play price and see if we have a bearish scenario here as price is forming. Okay, this is now a change of character. All right, okay. I just observed something here now. Just look at it. Like, right now, price change character here by taking out this low, right? So we can say this is a change of character, right? On a lower time frame though. So we can say, okay, this is a change of character. Why? Because price took out this low that created the last high, right? This was the last high. So we can still say here is a change of character. Here is a BOS. Here is a BOS, right? So this is the last BOS that was created, and this is the low that was responsible for the last BOS. But price was not supposed to take this low out, right? Price was supposed to do something like this and then go up to create another high. But instead, price took out the low, right? So we can say this is a change of character. Now look at what happened here. This low created this high, this higher high here. Sorry, this lower high here. It created a new low, right? So we can say this is what this is a BOS. This is a BOS. This is a BOS, right? Now we look at what happened within this zone. Before this BOS happened, right? We have a situation here. Look at this lower high. This lower high was expected, right, to take out this low to create the BOS. But it failed. It failed in its assignment. And look at what price did. Price went up and took it out instead. Price took it out. So in this scenario, we refer to this high here as a weak high. So this high is a weak high. So if you want to actually trade this type of if once you immediately spot this lower high, this weak lower high, what you do is you mark out your zone and then you place your sell position at the top of it, and you can decide to put your stop loss anywhere here, because most of the time price will not really, once price takes out that liquidity, it will reverse immediately, right? So you just put your stop loss a bit above it, and look at it. It's a good trade. It's a good trade. Let's cut price back a bit again. Let's see how it played out, right? So this is how you actually trade. Sorry. Oh no, that was a mistake. Let me take price back. Where was it? Now I'm seeing lots of examples here as well, right? You can just go on your chart, look for examples, and most of the time they play out. They play out most of the time, right? So let me replay price and see. So you see, this was supposed to take out, it failed, and look at how price took it out. Boom, right? So this is how you spot your weak highs and your weak lows. Now, if you found value in this video, ensure you subscribe to the channel and answer the quiz in the comment section so you can understand or test your understanding of the concept that was discussed. So that will be all for now, guys. See you in the next video. Bye.